Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 10th of June 2019, so welcome everyone. Welcome to this Monday's afternoon session where we're going to have a look at the markets, a few of the charts. But as always, before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, the first one I want to jump in here very quickly is WTI Oil. Now, as you're probably following the news, so there are some issues here, global issues concerning the oversupply of this black liquid, and basically now the OPEC is in negotiations and they're trying to reach a deal with all these suppliers, all the supplying nations. Basically, for now, looking at from the technical picture on the WTI oil, we can see that the commodity is still within a small downtrend here, trading below this downside resistance line taken from the high of the 21st of May, and it recently found some resistance here near the 54.60 level. As you can see, it's failing to kind of push above it. Now, in a way, we're going to continue observing this one. We're not going to touch this one yet, because in order to, let's say, at least target some higher levels, ideally we would like to see a nice good push above this downside resistance line, and of course this 54.60 level. And this way, if we do see something like this, and if we do see, let's say, a 4-hour candle closing above all these lines, then yep, we could target slightly higher areas like the 56.85, 87 zone, approximately there, marked by the low of the 29th of May. And if that doesn't hold, then yep, further move higher could be possible. But again, we will only consider such a scenario if we see a nice good push above the downside resistance line. For now, you can see that the commodity is trading below it, so in a way it has more chances to drift further down. But where we will get comfortable with slightly lower areas if we see a drop below the 52.60 zone, approximately there, and this way we could then target the lows of last week, which were near the 50.60 zone. But if that fails to hold, yep, further declines are possible. We could start drifting even further lower here, below the psychological 50 level, and maybe we could hit the area around the 48.40. But for now, of course, that's a bit of a long shot here. For now, let's take it short, and let's do it short and simple. Keep your eyes on the 52.60 level on the downside. If we see a slide there, and if we see a break below this, then yep, we could target the last week's lows, and then we'll take it from there. For now, it's stuck here where we need to wait until this makes a better move here, because it would be a bit tricky, let's say, to predict exactly where it would go. But for now, as long as it remains below this downside resistance line, of course, there's more chances for this one to move lower. But then again, because we're quite already oversold here on the shorter time frames, we may see it push higher as well. So that's why wait for that confirmation break first, and then react to the market. Jumping into DXY here very quickly, so the dollar index, you can see that it managed to find very good support near this 96.45 level. Now, I talked about this one previously in one of my videos last week, and I was telling you guys to keep a close eye on this one, because this could be one of those good potential support areas from where the index could bounce. And as you can see, we did have that nice good bounce and traveled today higher. but it struggled to overcome this little barrier right here near the 96.92 zone. So you can see that now it's sliding back down, it's correcting to the downside. The only thing is also, don't forget that we've got a downside resistance line here taken from the, let me just adjust this one quickly, taken from the high of, oh, there we go. Let me just taken from the high of the 30th of May. So good potential line to watch, because as you can see, for now it kind of continues to play out nicely. If that gets broken, of course, then yep, we could see this one pushing to the upside a little bit. Now if we do see a push above this downside resistance line and a push above the 96.92 level, then yep, what we're going to target here is we're only going to target the 97.37 level first, because that's the high of the 5th of June. If, let's say, this decides to travel this way and decides to push higher, so by the time it could make it towards this 97.37 level, in a way the index, the level here could coincide with the 200 EMA. So the 200 EMA could approach this area here, and this basically in a way could become a very important area of resistance, and then we'll take it from there, see what he wants to do. Does he want to push higher or not? But for now, as long as we're kind of trading here below this downside resistance line, of course there is some potential for this one to drift to the downside, but the only thing is here, what we're going to do is we're going to take a more cautious approach and wait until we see a drop below the 96.45 level. This way the index would confirm a forthcoming lower low, and then yep, we will target lower areas, initially aiming for the 96.20 zone approximately there, and then further down. But for now, as you can see, this is where the index is stuck at. It's below this downside resistance line, but actually is above today's pivot. But that's of course for now. Let's see how this day is going to end up trading. But like I said, these are the levels that we're going to be keeping a close eye on. So on the upside, once again, I'll repeat myself, what we're looking here for is a break of this little steep downside resistance line short term, of course, and a break above the 96.92 level. In terms of the downside, a drop below the 96.45, that's what we need in order to kind of aim further to the downside. Jumping into a few pairs very quickly now, and this one I talked about this morning, and I was telling you guys to keep a close eye on this AUDCHF. So as you can see, it continues to flirt with this area here, and actually with both of these areas that I talked about in my morning video, the 0.6895 level and the 0.6887 zone. So you can see that the pair pushed below the 0.6895, but found good support near this 68.87 zone, and then rebounded and pushed back up again, and not only back above the this 0.6887, but also above the 0.6895. So for now it's stuck here. We need to see that nice good clear break, and ideally a close of the 4-hour candle at least below the 0.6887 before we could consider further declines. And by further declines, I mean what we're going to target here is this level right here near the 0.6825, which is marked near the lows of the 3rd of January. So good potential target, but before we can kind of get comfortable with aiming for that area, we need to see that nice good break and ideally a close of the 4-hour candle below the 0.6887. So keep your eyes on this one. In terms of the downside, as you can see here, we need to see a nice good push above the 0.6950 before we could get excited with at least some higher levels here. For now, we're waiting. It's closer towards the lower side, and let's see how this is going to play out. GBPJPY, very quickly on this one. So today it's selling off. The GBP in general, the pound is on the weaker side due to bad bad GDP data that came out from UK. You can see that this got a hit, and it continues to slide. The GBPJPY continues to slide here. The only thing is that be very careful here because of this little tentative upside support line taken from the low of the 4th of June. For now, we're going to keep an eye on it, because as long as it remains intact, and especially if, let's say, a 4-hour candle is not able to close below this line, then, well, I mean, this could in a way hold, and we could see this one curving up and pushing back up again. But again, we're not going to speculate here too much. What we're going to do here is we're going to wait for a push above the 138.17 zone, approximately there, before we could start examining slightly higher levels. And by slightly higher levels, I mean 138.74 zone here, which marks the high of the 30th of May, and also it also actually could coincide. It already coincides here with the 100 EMA here, shown as the green line in a 4-hour chart, so good potential target. But again, we will consider that only if we see a nice good push above the 138.17 level. So for now, be very careful. Of course, it's still kind of trying to drift lower, but this is the area that we're going to be keeping a close eye on, because like I said, if it fails to drop below this, then this could hold, and we could see this one curving up and pushing back up again. In case this decides to break and we see a nice good clear break, and ideally, let's say if we see a nice good 4-hour candle close below this upside support line, then the next target for us is of course the 136.96 zone, marked by the low of the 6th of June. But a slightly better potential target for us could be around the 136.56, which marks the low of last week, so near the low of last week, of course. So keep your eyes on this one. Good potential target, but again, I'll repeat myself, we need to see that good close at least of a 4-hour candle below this upside support line, and of course below this 137.45 level right here, which is currently seems to be acting as a good area of support. So for now, keep your eyes on this one. It could be quite interesting. Let's see how this is going to develop, and wait for that confirmation break. And the last pair I wanted to quickly touch on, and that's Euro-Aussie. Now, this is quite interesting because, let me just kind of zoom out here a little bit. So, basically a while ago here, should I say in the end of May, we saw this upside support line getting broken, and this upside support line has been running here from the, approximately from the lows of the 19th of April. So it broke it to the downside, it traveled lower, but found good support near this 160.65 zone, approximately there, and you can see that then it kind of this area acted as a good support, and the pair kind of bounced had a few bounces from this area, and then now it's kind of pushing back up again. So it's aiming currently towards this 1.6245 level, marked by the high of the 24th of May, and if that fails to withhold, the next potential target here could be, and let me just quickly put this one on the chart, the next potential target could be around here near the 1.6280 zone, so marked near the highs of the 17th of May. So keep your eyes on this one, because if, let's say, this fails to withhold, the 1.6245 level fails to withhold, but the 1.6280 zone holds, now we could see a small correction back to the downside. But what's interesting here would be that we maybe could see this one actually forming something of a range. Of course, I'm getting ahead of myself a little bit here, but still, we always like to look for potential patterns, and of course, for now, could be an interesting one. Of course, if, let's say, this, like I said, if this decides to push above the 1.6245 and then tests the 1.6280, this might reverse back down and travel to the downside, and in a way, this way could kind of confirming this potential range here. Of course, don't get me wrong, we could see the rate stalling near this level as well, so in a way it could fail to break above this 1.6245 and then reverse back down. So it also could be confirming this other little, like, slightly narrower range, but of course, for now, guys, of course, keep the range idea just in the back of your head. For now, nothing is confirmed yet, just I wanted to show you that's something that could potentially happen. So for now, the main question here is, of course, will this 1.6245 level get tested today? If it does, will it actually hold? If it fails to withhold, the last resort here for the bears to step in could be around the 1.6280 zone. So keep your eyes on this one. But if that fails to withhold, then, well, I mean, this could be aiming for higher levels. This would confirm, of course, a higher high here on the bigger picture, and we could then target going further towards the 1.63 and above. For now, that's a bit too far from where it is right now. Let's see first what it wants to do with the 1.6245 and the 1.6280 as the second second option. Okay guys, I hope you found it useful. Thank you very much for sticking around and watching until the end. If you want to join me tomorrow morning, as always, on my Traders Espresso, and that's 6 o'clock GMT time. For now, I hope you have a beautiful evening, guys, and I'll see you later. Bye bye.